the Deputy Chairman of Planning Commission, Montek Singh Ahluwalia. Siddharth.
Thank you very much. I'm joined by Montek Singh Ahluwalia, the Deputy Chairman of the Planning Commission. Mr. Ahluwalia, we are talking today, happens to be a coincidence, 1 year of the UPA just getting over. In your assessment, how has the government done in the first year of its second tenure?
Well, personally, I think they've done quite well. I mean, if you look at the economic side anyway, when the government, the second term began, we were in the middle of a very deep international recession. And in this situation, the first priority of any government had to be to bring the momentum of growth back to the economy, to create a feeling, a positive feeling about economic prospects, without which employment growth would not have taken place. So I think if you look at it from that point of view, there's absolutely no doubt that we began with being pulled down from a 9% growth rate to 6.5%. We improved to 7.2% last year. We are now well set for 8.5%. Manufacturing is back into double-digit growth. I would call that very good going. I mean, there are problem areas like inflation is higher than we want, but I think that's also coming under control.
So, sir, in terms of the impact of what was done from the slowdown in 2008, clearly 3 stimulus packages, a lot of went in, expenditure went up. Now we are seeing a rebound. The Prime Minister today spoke about 10% growth per annum in the medium term and actually put a figure to the current financial year, 8.5%. Do you agree with these projections?
Well, I certainly agree with the 8.5% this year, and I think the Prime Minister has said that we should target 10% in the medium term. My perception is that the underlying growth potential of the Indian economy, if the world economy is normal, is around 9%. I think we will get to 9%, back again to 9% in the last year of the 11th plan. That's 2011-2012. So what the Prime Minister is saying is, looking beyond that, let's try and target 10%. Going from 9 to 10 is not impossible. But obviously it has to be based on what global conditions are like, how quickly will the world get back to normal, etc. But even if you don't get 10%, we are now talking about India growing rapidly at a rate that was pretty much inconceivable only 10 years ago. So that speaks very highly, both of the economy, all the agriculturists, the workers, managers, etc. It also speaks very highly of economic management, because these things don't happen if the economy is not well managed.
So you mentioned inflation, but we'll come to that a little later. But a more pressing question that is in the minds of most people is what is happening in Europe. We have seen the situation in Greece. There are fears with regard to other countries. In fact, the entire issue of the European Union and how it is linked with the Indian economy, 25% of our exports roughly to the European Union. But in the broader context, are we looking at a repeat of the 2008 crisis in any way? And do you see some sort of impact on India? And what will that mean for the government? Will it mean yet another challenge on the fiscal front?
Well, I'm not an expert on what's happening in Europe, but it's quite clear that what is happening in Europe is a new and a worrying problem. I mean, the key issue is, will that be contained or will it sort of spiral out of control? I'm hoping that it will be contained. I mean, you must make a distinction between what happens in Greece and what happens in Europe. I think Greece is in very substantial difficulty, and many people are speculating whether Greece will be able to retain confidence of markets. Now, it's not for me to add to that speculation, but if you take the Greek economy by itself, I don't think that, I hope that things go well for Greece, but I don't think that if they don't, there'll be a global spin-off. I agree that if Europe as a whole is financially disturbed, that will have some spillover effect on the rest of the world, but we were not counting on rapid export growth in order to get back to high growth in the next few years. I mean, we had already factored in that global export growth is going to be poor or weak. Maybe if Europe is in deep trouble, it will be a little weaker. In our thinking, the dominant concern was that we should stimulate the supply side factors that lead to rapid growth of the Indian economy. And what this meant was that we need to make a special effort to ramp up investment in infrastructure. That would provide domestic demand, which would to some extent offset the fact that export demand is lower. Now, if you stimulate investment demand and export demand is low, obviously export industries will still bear a bit of a brunt, but the economy as a whole may benefit from other demand that is put into it. And that's the thinking behind it. My feeling is that for the current year, I think 8.5% will be achieved. I don't think that the Greek crisis will lead to a European meltdown, and therefore the global economy will maintain its balance, and therefore we should be able to put in 9% in the last year of the 11th plan. And then we'll be well set to face up to the challenge that the Prime Minister has thrown. Can we go from that to 10%?
So you spoke about giving a stimulus to the economy, but we've also seen a parallel increase in inflation, and that, like the Prime Minister said today, is a major concern for the government, although he also talked about 5 to 6% headline inflation by December, which is quite low from where it is. Food inflation is at the moment in the same trend range. It has also spilled over into the manufacturing area. So given that, and given the context of a likely increase in crude oil prices globally, Mukesh Ambani mentioned $100 per barrel, how much of a risk do you see on the inflation forecast that we have heard today, and how much of a risk is crude oil flare-up to our economy?
Well, look, on inflation, when you look too far ahead, there are all kinds of uncertainties. I think the solid things you can say about inflation are that the rate of inflation is clearly coming down. Okay, I mean, if you don't look at what the prices are on a year-on-year basis, because that is affected by the base effect. I mean, last year, this time, prices were rising very rapidly. So if prices don't rise this year, the inflation rate 4 or 5 months down the road will be much lower. So if you want to look at what's happening to inflation, you should look at what is happening to prices in the last 3 or 4 months, not this year-on-year comparison. On that basis, I think the 5 to 6% number which the Prime Minister gave is correct, and that if the present trend in prices is simply projected, last 3 months trend, for example, you will in fact get something of the order of 5 to 6%. I think the same thing is true for food inflation. There's a lot of uncertainty. I mean, we know that the advance information about the Kharif, the rains, is that they will be normal. But in the end, until the monsoon happens, there's always some uncertainty. My expectation is that as and when enough people perceive that you're not going to have a drought this year, you'll have a sudden deceleration in inflation. And certainly around September, October, you will have a far more comfortable position, both in terms of overall inflation and in terms of food inflation.